Come on in, sit back and relax. You're listening to episode 220 of the WealthTech Today podcast. I'm your host, Craig Iskowitz, founder of Ezra Group Consulting. And this podcast features news, interviews, and analysis on the trends and best practices all around wealth management technology. My guest for this episode is Matt Radgowski, CEO of Halo Investing. I'm really happy to have Matt on the program. I've known him quite a while. He's been in the industry a while. He was appointed as CEO last June after coming on board as the COO. Matt came from about a decade at Morningstar, where he was head of advisor solutions. And before that, Matt did stints at Wilshire and Ibbotson. Now, Halo is an interesting company. We've been talking to them for a while as part of our research on alternative marketplaces. Now, Matt is taking over from one of the co-founders, Biju Kalafakhan, who was the CEO since 2015. But when companies grow, they get successful, get some money under the belt, they oftentimes need new management. So it's the right person at the right time. Biju was the right person to lead them from startup to a successful company. They raised $100 million Series C round in October 21, and they've been growing almost triple, quadruple a year, which is tremendous growth. So looks like they're going to need someone with Matt's skill set to take the company to the next level. Before we get started, let's talk about tech stacks. Now, at Ezra Group, we've seen tech stacks of hundreds of RIAs, and let me tell you, most of them are loaded down with tech debt. So you shouldn't feel too bad about yours. But let's face it, tech debt is like a giant anchor holding back your business growth. If you want to free your firm for exponential growth, you should run, not walk, to our website, ezragroup.com, and fill out the Contact Us form. Our experienced team can evaluate your current tech ecosystem, deliver targeted recommendations, optimize your existing systems and operations, or run an RFP and help you implement new software to take your firm to the next level. You can take advantage of our free consultation offer by going to ezragroup.com. A few quick housekeeping items that we always do before the interview. Please subscribe to the show wherever you listen to podcasts so you don't miss an episode. Check out investinothers.org. That's the Invest in Others Charitable Foundation. They do a lot of good work in our industry, raising money to donate to charities that are either run by or helped by financial advisors. Ready to go. Let's kick this thing off. All right, I'm excited to introduce my next guest is Matt Radgowski, CEO of Halo Investing. Hey, Matt, welcome.
Thank you, Craig. Appreciate the opportunity to be here today.
I'm happy you can make it. Happy New Year.
Happy New Year.
I believe you can say Happy New Year until the end of January, so we're still all good. We're covered.
We're aligned.
Where are you calling in from, Matt?
I'm in Chicago today. Cold, snowy Chicago.
It's okay. It's a great place to be. It's the people that matters, not the weather.
That's right. Builds character, as they say.
I'm normally in New Jersey, but I'm traveling at the moment. I'm in Florida, so I'm avoiding all that cold weather that's in New Jersey and Chicago right now, thankfully. Can avoid it. And here we are. So can you please give the audience the 30-second elevator pitch in case they don't know what's all this about Halo Investing?
For sure. In its essence, Halo is a wealth technology platform that connects the manufacturers of protective investments. All right, so that's structured notes, advisory, fee-based annuities, buffered ETFs, other protective investment products with advisors that use them. And so we've automated those workflows that are required to source ideas around these products, actually purchase these products and allocate them within your client portfolios. So that's really at the heart of it. That is what Halo is.
And Matt, if I'm not mistaken, have you hit your 6-month mark?
That is correct. Yeah. So, joined Halo back in August of 2022, but I'm 6 months at the helm as CEO. So excited to be here and really excited about the future ahead here for the firm.
Congratulations. Happy to hit that milestone. All right. So let's talk about some of the work you guys are doing. Explain to me in the audience about guiding the buyer experience using technology. Why do we need to do that specifically around these types of products?
Yeah, absolutely. And so, there's no question that the products that I mentioned earlier, and we'll kind of key in on structured notes as one, there's a complexity to them in terms of their design and deployment. And so when we talk about the guided buyer experience, historically, typically, technology solutions, the advisor comes in and they pull and push a bunch of levers, kind of explaining what they want. They hit a button, and then hopefully outside, that process behind the scenes returns some type of recommendation, product guidance, or recommendation, or output analysis, et cetera. And so when we think about the guided buyer experience, we're trying to assist that advisor, understanding the objective that they're trying to meet for their individual clients, and then helping them intelligently set defaults, intelligently sift through the products, features and functionality that are available. And so again, that product sourcing, but then also just making sure that once they've made that decision, they can seamlessly buy that product, allocate it within their clients' portfolios, and then manage it at an ongoing basis. So really looking to, again, streamline the way that they evaluate, source, and then integrate those products into their world.
That's what it's all about. It's no good if you can't integrate this stuff, right?
That's it.
So when we're talking about some of the specific technology and some of the things you're doing to facilitate sub-advisors building strategies, how does that work?
Yes, and so Halo has launched a structured note SMA program, and so two key elements of that are smart investment people to build allocations of notes based on an objective, whether it's income or growth. But given the fact, again, that you're sourcing structured notes, you're managing a portfolio of those notes as a sub-advisor or advisor to the strategy, you need tools and infrastructure to do that. And so our technology allows that manager of the portfolio to go out and seek product from multiple issuers, price those products out and bring them in and create that allocation of structured notes for that advisor. And then on the buy side, the advisor can come to our platform, seek information around those SMA strategies, their bigger objective around growth or income, specifics around what those objectives are, how the portfolios are built and rated, but then again, purchase that SMA and then allocate it out to their individual investor clients. And so that technology again creates, for us, the whole thing is around accessibility. And so if you're an advisor that is interested in the product, aren't quite as proficient in building and managing portfolios of structured notes, you can hire a trusted third party. We've recently announced a partnership with WisdomTree that we're very excited about. They're managing a growth and income strategy on the platform. And in addition to that, it's a great complement to their ETF model portfolio strategies that they offer. And so it's kind of a great combination. It can be a good potential allocation to, again, provide growth and protection as well as income around it. And so that's a technology we've built and launched recently that we're really excited about.
So will sub-advisors, for example, an SMA manager, can they build a model of structured notes and then deliver that to advisors? How does that work?
That's exactly correct. And so if you think about most of the wealth management platforms out there today, they have effectively what they would call that manager console, right, where a model manager can come and build an allocation. And so effectively, we've replicated that infrastructure. So WisdomTree, for instance, can come to the platform, and they can source notes and create, again, an allocation of those notes on the platform itself. And so that's let's call that the manager console. And then there's the subscription process whereby the advisor says, I like that strategy, right, that's being managed, whether it's by WisdomTree, Piton, New Edge, Invictus, those are the managers on the platform today. They can pick from one of those strategies, provide their allocation, across their client book. And so again, I'd say the closest analogy would be that manager console that you see in many of the wealth management platforms that allow models to be built and managed there.
Because that's something that's been sort of like the holy grail to be able to build these types of models, because we used to call that characteristic-based modeling. With fixed income, you can't really build a model because there's a million different bonds, right? So you have to say, give me a bond that has this duration, this maturity, this risk level, this rating, and then the system's got to go out and find it. There's very few programs or platforms that can actually do that.
That's right, and that's again what's super exciting to us. Just leading to hopefully right a bigger market in general for the structured notes is that the magic there is defining the outcome of the strategy having a defined outcome, right? So again, we'll just stick with the big boulders, right? Income as a focus and core, or with some level of protection, and then from there, to your point, we can help that manager really get to that product selection in an efficient way that creates an accessibility, and that's what it's all about. These strategies, right? Providing access to product types that have a positive impact on the outcome, but do it in a way that doesn't create too much operational burden for either the manager or the strategy itself or the advisor that's looking to utilize it.
Nobody wants operational burdens. That's not a feature. We don't want that. Keep those away from us.
That's right.
We do not want operational burdens. What we do want, which I find is interesting, is the ability to provide trade ideas, which I know your platform does that. How does it suggest these?
Yes, and so actually another piece of functionality that comes out, an update to the platform actually tomorrow, quite frankly, or next day. But and so at their essence, the structured note is a bond, so it has a maturity. In some cases, they can be called. And so one of the things that we've done to improve the experience is that we have life cycle. So we show the advisor what, again, those events that could be happening, whether maturity or call or some other cap or other event. In the past, they would have to come and basically source ideas on their own. And so what we're doing is providing some guidance. If your objective has changed or if you define your new objective, you will provide some guidance in terms of what notes might be actually appropriate for you to again use the proceeds of that maturity or call to find a new note to allocate to. And so again, just reduces the burden on the advisor to come to the platform with a specific idea of what they want to do, when they want to do it, and how they want to do it. We're providing that automated recommendation or guidance infrastructure to again help them get to good ideas more quickly, and that's what it's all about. Again, making sure the right investments end up in the right portfolios, and so excited about that for sure, and that will continue to improve. The promise, right, of AI. Given the data and the volume of transactions, we're excited that we have a good framework in place for those recommendations today. But again, it'll continue to improve over time as we have more data and can continue to innovate the technology.
One question I have is on your platform, if I'm an advisor, there's all these different providers of structured notes, Citigroup, BMO, Morgan Stanley, Wells Fargo, Credit Suisse, on and on and on. How do I pick one? How do I get in contact with them? How does your platform help me to communicate with these providers of different products?
Yes, and so a couple things. There's, I'll say the technology and what it supports, and then let's call it, just get good old fashioned, I'll say client engagement work, and we certainly believe both are still very important. And so, we've developed relationships with those issuers that you mentioned there, and so we're in constant communication with them to try and understand, what are their views of the market, what are the best ideas that they have on the shelf, where do they feel, right, that they actually can fit into a portfolio, kind of where do they shine the most from the types of notes that they issue. And so we bring all that information and serve that up, whether it's through our website or through the sales ideas or note ideas that show up on the platform itself. Within the platform, then, again, the whole idea is that you can search and select based on the credit rating of those issuers, but also you can actually see similar notes and what is the pricing, right? Or what are the benefits or the outputs that each of those issuers will provide. So you can start to see based on credit quality, what is the income that can be generated? What's the participation rate or protection levels at a certain price? And so you can really begin to discern, which of those, based on, again, whether it's previous relationships, exposure to those firms or issuers, and then the facts and circumstances around the product. It's a central place where you can see those things. And then again, in addition to that, we are at the ready to connect the advisor directly with those issuers where it's helpful and beneficial, I'll say, through that more human interaction. And so we'll spend a lot of time, again, trying to make sure that we are understanding new products that are evolving at the issuer level, et cetera. And so it's data, it's analysis, it's access, and then engagement with those issuers. That's the magic. And that's really what I think will again, help continue to grow the market with advisors that may not be as familiar with the product. Tons of resources there, right? Again, we're at the ready. We have a field engagement team that's at the ready to help educate, guide, coach, and then again, the issuers are at the ready as well.
I like the feature that's called "What Others Are Buying."
Yes.
It shows you notes. How would you generate that list? Is it based on specific peers of what kind of advisory firm I am, or based on my previous buying habits? How does it populate that list?
Yeah, so that's, and you keyed in on perspective, or not perspective, what will be an innovation on the platform. But today, right, what others are buying, and so we'll actually show a combination of both the calendars, which are the regularly produced notes on a monthly basis from the issuers, as well as what are recent auctions. So what I mean by an auction is that an advisor can come to us with an idea around what they want a note to look like and be. And then we'll actually, you mentioned those issuers, we'll actually present that idea out to those issuers, and they will actually bid on that note. And they'll come back with their best offer, right, around that note. And so what we do is, in that, what other advisors are offering is we present out a latest list of what those are. In addition to that, though, many of those auctions that I referenced are available for what we would call a tack-on investment. And so, an advisor, for instance, here in Chicago, could build and auction out a note with a, let's call it $1 million allocation targeted. We can then actually put that on the website where you see, or the platform where you see what others are buying. We actually engage through email out to our network of advisors and say, look, interesting note was put out to auction. Here's the pricing. Would you like to actually tack on to that allocation? So it's almost a crowdsourcing of dollars there. Now, future state, right, to your point around past buying habits, today I will just share, right, it's a great tool. It presents what those notes are that are being bought. But future innovation will include setting your preferences in a more structured way, and will return a more curated list. You can do that on the calendar page. You can basically preset types of notes you're looking for, and that'll stay. It's persisted. But that what advisors are purchasing, eventually your profile will influence what you see on the platform. Oh, I lost your sound there.
That's what I want. I want to see it really know who I am and what I'm buying,
Yes.
and make those advanced recommendations so that it saves me time and effort. I don't want to do all the searching.
Absolutely. And so we're literally in the midst of updating our advisor onboarding and then just the ongoing engagement. And so we can see what they've bought. And so those habits are clear. But again, we want a combination of qualitative, right, and quantitative, in terms of both asking them, hey, what are the types of things you're interested in? What does your profile look like? But also then use that data that's all there on the platform in terms of their previous buying habits.
Plus, they can show me what other advisors with similar portfolios are buying.
I totally agree. And it's perfect for the advisor that may be new to the space or new to the product, in that they can rest assured this isn't just Halo saying, hey, look, here's an idea we think is great. You should jump on board. It's peer-to-peer effectively. And that's ultimately the vision of the platform, is to drive towards a community whereby information, insights, education, can be shared across that advisor base. But that's a
Mhm.
good way to start, that community experience is through that tack on process.
Yeah. So Matt, you were the former head of advisor solutions at Morningstar. That's a great gig. Why
Yes.
leave and come to small startup tech vendor in a space of products that no one understands? What was the attraction here?
No, for sure. And I always start by saying, forever grateful to my family over there at Morningstar. It was fantastic role, incredible experience to really just see how advisors work and operate, what are the trends, key trends, and what are the solutions, technology, investment that they're bringing to bear. And so when in that role, the things I consistently heard around personalization of portfolios, goals-based financial planning driving towards outcomes or defined outcome-based investment solutions, building better portfolios to deliver better outcomes to investors. So passionate about that. And so you've been in the business of building these types of solutions for way too long, quite frankly, but I love it. And so got connected with Halo and really saw this structured note. I have experience in the annuity space. Feel the product has a great role within the overall experience of the client, and then became exposed to the note and just saw what it can do, right? In terms of it's non-traditional, right? So it's not your typical stock or bond. It's personalized, but it can deliver that defined outcome. I really saw it as a great potential addition to the way advisors are building great portfolios today. And so, nascent market for sure. You're right. Got in early, but again, just very passionate around continuing to evolve the process of how advisors build and manage portfolios, and really just again feel it should be a great addition, always in a measured way, right? Need to build portfolios that are good, good for purpose and fit with the advisor's outcome. But again, as I got exposed to it, dug into the mechanics of it, you really think it can drive towards better outcomes.
I think one of the biggest parts is being able to put structured notes into an SMA because that's going to enable you to launch on almost any managed account platform because they all understand what an SMA is. So if you can put these products inside of an SMA, you can just launch it anywhere.
That's exactly right. Using that existing infrastructure is key, right? And then, as right, sophistication, as happens in many different product scenarios, as experience and sophistication of the user grows, they may continue to use that SMA. They may pair it or complement it with specific individual notes that they select on their own. But agree, just in terms of exposure to the product, accessibility, integration, we're certainly excited about the SMA and what it offers.
Matt, we covered guiding the buyer experience using technology, and now I'm going to move on to integrating into the workflow. So that's a key aspect of any investment management product. You need to be able to integrate it into advisor workflows, or else they're not going to they won't use it as much if they have to task switch or swivel chair to other systems. What have you done to integrate the capabilities of buying, managing structured notes and other protection products into the way advisors do their business?
For sure, and this is an absolute area of focus. So guiding the buyer experience, the second, right, critical pillar is integration. And so agree with all you've said, right? If it's hanging off the side of the desk, if it's some different system, right, just becomes overly complex. And then, there's obviously, that friction, creates, again, lack of adoption. And so we are very fully committed to integrating our solution into the bigger wealth management ecosystem. I would say, the advance, quite frankly, I'm most excited about it at the moment. We are the structured note platform of choice within the Pershing NetX 360 platform. So if you're an advisor or a correspondent broker dealer that uses that platform, you can directly access our structured note capabilities through that platform itself. So it's literally click to trade. And so it lives in that environment that the advisor is using. And again, it makes certain that that note is purchased The flow remains the same with the other investments that you're engaging with on that Next 360 platform, and then shows up within your custodial account, is visible within that account in a very simple way. And so super excited about that partnership. Pershing has been a great partner on that front. And we understand, right, that same accessibility needs to be created across multiple custodians, multiple wealth management technology and platform solutions. And so that does start, we don't need to get deep into our, the platform architecture, but, API first is definitely, a focus to make sure that when and if and how we're going to be integrated into those systems, we do it in a way that's that's as seamless as possible. We do have a strong relationship with Nitrogen today as well. I'm not sure if we've talked about that at all in the past, Craig, but in terms of scoring the notes, right, from a risk scoring perspective, we provide data and infrastructure around that. Again, integrating into the way the where and how that advisor works as well. So, but again, those are the types of things, right? The Pershing NetX 360, Nitrogen, others, those are great points of connectivity, and we'll just continue, right, to focus in that area, as we know its importance.
So with Nitrogen, you act as a data provider. You're sending them data on the risk capability or the risk scoring of structured notes that they can then feed it into their platform.
That's exactly correct. That's it.
So when an advisor goes on to Nitrogen and goes to the risk tolerance section and says this client's got XYZ structured note, Nitrogen knows how to handle that, pulls the data from the what you sent them and assigns the rating.
That's right. And so strategically, right, I think it's the predisposition of the firm. I think that, from a strategic perspective is that we know, right, that we love our platform. Our platform's incredible. We want it to be a destination for sure. We also know that, again, like we need to collaborate with, we need to partner with, we need to engage with different systems, right? And again, work with those. It's not, again, it can't be, the our way or the highway. We do understand the importance of, again, collaborating with and you're getting to a good, good integrated solution.
You talk about something I saw in the news, your relationship with GeoWealth.
Yes. Yes. Excited. You're both right here in Chicago. And so you have followed and engaged with the firm for quite some time. And so we announced a partnership that's really focused on making sure, again, that as portfolios begin to incorporate structured notes, first of all, there's an engagement just around the education and onboarding, right? So making sure that the advisors that are looking to use these structures know what they are and how they're used. And then it becomes integration of that data and information into the GeoWealth system. They are, I think, very similar mindset just in terms of, what I would describe as contextualization, right? So what does the note do inside the portfolio itself? And so, that's a partnership we announced here, I'll say over the summer, fall, and we'll continue to, the depth of integration, will continue to deepen, for certain. But again, excited about their capabilities and technology that they've built to serve the advisor. You're certainly growing traction in terms of, again, their exposure and use. And again, similar mindset just around they understand the value of the note, but they also, again, understand there's technology we both need to build to better show it.
They're an up and coming TAMP, so always interesting to see how they're going to incorporate your structured note SMAs into their platform.
You got it. Yeah. So excited about that. And again, it's proximity is helpful as well, right? We can right across the city from us here. So
that's important. Go have lunch.
Yeah, that's right.
So going back to the guided recommendations, something around when a note matures that you can automatically recommend something. How does that function and how does that integrate to the advisor's workflow?
That's right. And so in the past, so like a bond, the note has a specified maturity date. And so if, historically speaking, if a note was going to, if a note matured today, so, January 9, 2024, The first step in our process was to make sure that that advisor knew the note was actually maturing. And so they can see all the notes they hold within their client accounts at both a macro level, household, and an individual account level. Now, what they used to have to do is come and say, okay, that note is maturing. It had these characteristics. Our platform, you used to have to go back to the start and say, let me key in, right, what that note looked like, its features, right, its maturity, its duration, its protection, or its income, or its participation. Literally key back in all of those things. And so basically what we've done is created a guidance or recommendation engine that says this note is maturing. Here's a few ideas around what you might do with that maturing capital. Right, so a note that is basically replicating the exact terms, or maybe terms have improved in a certain in a certain element of it, and we'll again serve up that recommendation to the advisor, and then they own, right, ultimately that decision around what ends up in the client's portfolio. But again, we've created a streamlined process to do that, and so super excited about that. In that, again, they don't have to go back to the start. It allows them to pick up where they left off and truly manage it as an ongoing allocation and portfolio, in a way that's, again, easier, quite frankly, and again, with an eye towards driving towards better outcomes.
Make it easy, man. Where's my easy button for this stuff?
That's
Being
it.
advisors getting more and more complicated, and if I want to be able to provide, I want to differentiate my practice with these types of securities. I don't want to spend a lot of time deciding which one's the right one. I just want a recommendation and be able to manage it and make sure I'm doing what's best for my client.
That's right. I mean, yeah, you mentioned that diversification of the practice, right? I mean, it is a tool that's still, I would say nascent in terms of adoption. About $100 billion of notes were issued in 2023. And so still a lot of room for growth. Definitely see it as a good complement. I'm not one of those, it's a hammer to every nail. It's not, right? And so if you kind of look about the ways you want to manage, the risks within the portfolios or protect that portfolio or drive income, again, another great tool in that toolkit.
Well, Matt, you've said it all. We've run out of time. Can you please tell everyone where they can find more information about Halo Investing?
Absolutely. Please come and visit us at haloinvesting.com. You'll see our website there. There is the Halo Journal that's on the website. So, it's not behind a login. You can see a lot of great information around education around the products, ideas in terms of prospective use, but all there at haloinvesting.com.
Matt, thanks so much for being here. Really appreciate it.
Thanks so much, Craig. Always great to connect with you. Enjoy the sun down there, and look forward to connecting again here real soon.
All right, Matt. Thanks.
Thank you.
Hey, it's Craig again. Here are my top 3 takeaways from this episode. So 3 main points. 1, guiding the buyer experience with technology. This is one of the goals that Matt is driving for Halo. They're trying to provide a lot of analysis and data for advisors because structured notes are not simple instruments. They're complex in their design and use. So the more tools and technology Halo can provide to help advisors understand when it's best to add this type of security to what kind of client portfolio, guiding them through putting in their objectives, their product selection, how to allocate, and making that workflow easy to use. 2, speaking of workflow, integrating the workflow into the top custodians and portfolio management platforms. For example, Halo is already integrated directly into Pershing's NetX 360 platform. So any advisors clearing through Pershing or custody of Pershing can access structured notes and get them directly into their accounts. Interestingly enough, Halo is also becoming a data provider, and that they've gathered so much data on structured notes, they're providing data to other firms that need it. For example, Nitrogen, their risk platform, needs to know every security, every instrument in a portfolio and understand the risk. So Halo providing that data to Nitrogen is a great benefit for both firms. 3rd, specific technology innovations. Halo built technology to support a structured note SMA program, which allows advisors to outsource structured note portfolio management. This is brilliant because what it does is it takes a very complex instrument and fits it nicely into an existing platform. So every wealth management platform, pretty much all the big ones, at least all the enterprise wealth management platforms, support SMAs. If you make your structured note program portfolio look like an SMA, almost anybody can support it without having to see, you're basically hiding the complexity behind the SMA in the SMA structure. And Halo automatically provides advisors with reallocation recommendations when the notes mature. That was a question I asked them because, having been in the industry for a while and built a couple of these systems, when these notes mature, whether they're structured notes or they're repos or anything that has to roll over, you need a system that can track that, especially for firms. You could have dozens or even hundreds of these things, and it's very difficult to know when they're rolling. So having this automatic reallocation recommendation from Halo is going to help advisors tremendously. And that's a wrap. You've made it to the end of another episode of the WealthTech Today podcast. But before you leave, please go to our website, EzraGroup.com, scroll to the bottom of the homepage, and sign up for our newsletter. Once a month, you'll receive an email chock full of wealth management goodness, news, information updates. You won't be disappointed. Trust me. Thanks for listening, and talk to you all again next time.